Every morning in Stuttgart, the robotic arms swing into action, lifting glowing sheets of precision-milled steel and carbon fiber into the frame of a Mercedes S-Class. For decades, this ritual has symbolized German engineering excellence and the global appetite for luxury on wheels. But in July 2025, something has changed. On the factory floor, a large red 12% flashes across the logistics screen, an alert that US-bound sales have collapsed. Thousands of S-Class sedans, EQS SUVs, and AMG models are lined up in silent rows, not in dealerships, but in German warehouses and ports, waiting for clearance that may never come. The reason is as political as it is economic. Donald Trump's re-election has turned the US auto market into a battlefield. A sweeping 30% import tariff on foreign vehicles, framed as a nationalist policy to reclaim American manufacturing, has triggered chaos not just in Detroit or Stuttgart, but across the entire global supply chain. And for Mercedes-Benz, one of the crown jewels of European automotive heritage, the American market is no longer open, it's a minefield. The pain isn't limited to the numbers. Behind that 12% sales drop lies a collapsing ecosystem. US dealerships in California, Texas, Florida, and New York, once the pillars of Mercedes's North American strategy, are reporting unsold inventory piling up. In Los Angeles, showroom staff whisper that brand new GLS models have been sitting untouched for 3 weeks. In Miami, service centers that once overflowed with appointments now have empty bays. The problem isn't demand, it's politics. Trump's 30% auto tariff has added nearly $18,000 to the price of high-end German imports. For the average American consumer, that's the difference between affording luxury or abandoning it. Mercedes tried to hold the line. They offered incentives. They pushed financing. But by June, it was clear the model had broken. Customers balked. Orders plummeted. And now, cars once destined for US soil are being rerouted to South Korea, Saudi Arabia, and even South Africa, where buyers are more insulated from Washington's economic warpath. Inside the Stuttgart headquarters, there's a rising sense of alarm. Executives who once dismissed the possibility of broad US tariffs as election year noise are now confronting a full-blown crisis. Supply chain managers are juggling ship manifests, trying to redirect thousands of vehicles before US customs warehouses start charging demurrage fees. Finance officers are staring at currency hedging losses, as the dollar's recent dip against the euro has made US transactions even less profitable. In the strategy division, talk has shifted from growth targets to damage control. One senior manager reportedly told internal staff, "We are no longer expanding in America. We are trying not to drown." The pain is also reaching Alabama, where Mercedes has maintained a major assembly plant in Tuscaloosa since the 1990s. That factory, which builds SUVs and electric models for the US market, has been quietly reducing shifts. Around 900 workers have been furloughed or reassigned as US orders dry up. The company hasn't confirmed a full-scale production pause, but sources say that internal forecasts now assume a 40% reduction in North American output through the end of the year. Workers who once took pride in building world-class vehicles for American roads are now questioning their job security. Suppliers across the Southeast, small manufacturers who produce everything from seats to electronics, are also bracing for impact. When a company the size of Mercedes slows down, the ripple effects hit hundreds of smaller firms, some of which may not survive. Meanwhile, US consumers are feeling the squeeze. Walk into any luxury dealership today and you'll see it. Prices have jumped. Wait lists are growing longer for popular models. Financing rates, already elevated due to inflation, are compounding the problem. And while domestic manufacturers like Cadillac and Lincoln are trying to capitalize on the void, they haven't caught up in quality or prestige. The result is a luxury market in limbo, too expensive for many, and increasingly unpredictable. American dealerships are pushing back against Mercedes headquarters, demanding better terms, delayed invoicing, or even tariff rebates. But Stuttgart's hands are tied. With shipping costs rising, insurance premiums climbing, and political uncertainty looming, the margins simply don't exist anymore. Mercedes, a company that once treated the US as its second home market, is now treating it as hostile territory. Behind the scenes, the European Union is preparing to retaliate. Brussels has drafted a package of countermeasures targeting American auto exports, agricultural goods, and even tech companies operating in Europe. Officials have accused the US of violating WTO norms and using trade as a weapon. Germany, in particular, has taken the blow personally. With Mercedes, BMW, and Audi all facing similar challenges, the German economy risks a significant downturn if the auto sector falters. Political leaders are demanding action. Chancellor Annalena Baerbock has reportedly reached out to President Trump for dialogue, but has received only boilerplate responses. The mood in Berlin is turning bitter. Some lawmakers are calling for a strategic decoupling from the US, suggesting that Germany should redirect its industrial base toward Asia and emerging markets, away from what they see as an increasingly unreliable partner. This shift is already visible in Mercedes' own strategy. While US tariffs choke one pipeline, China and the Middle East are being courted as lifelines. Mercedes is offering steep discounts on electric and luxury models in Shanghai, Riyadh, and Dubai. The company is also accelerating joint ventures with Chinese EV firms and Middle Eastern sovereign funds, hoping to offset North American losses with alternative demand. But even this pivot comes with risk. Chinese EV makers like BYD and NIO are becoming formidable competitors, threatening Mercedes' position in its own segment. And political alliances with countries like Saudi Arabia raise ethical and reputational concerns, especially among Western investors. The long-term cost of abandoning America, even partially, is a question Mercedes executives are struggling to answer. On Wall Street, the financial fallout has begun. Mercedes-Benz Group AG's shares have slipped nearly 9% since the tariff announcement. Analysts at major banks like Morgan Stanley and UBS have downgraded the stock, citing North American exposure and inflationary headwinds. Bondholders are starting to demand higher yields. And major institutional investors, many of them American, are quietly asking for clarification on Mercedes' global strategy. The automaker is trying to project confidence, but internal reports suggest deep anxiety. Profit margins for US exports have collapsed. The EQ line of electric vehicles, once expected to drive the company's future, is now seen as a liability in tariff-ridden markets. With the US administration showing no signs of compromise, the company is increasingly bracing for a prolonged downturn. And it's not just Mercedes. The entire German auto sector is under siege. BMW has halted some exports. Audi is suspending shipments of certain models. Volkswagen, although less exposed to luxury tariffs, is seeing its parts business throttled. Across Europe, automakers are reassessing their global strategies, shifting resources away from the US and toward more politically stable or economically promising regions. For the first time in decades, the transatlantic auto trade, once a pillar of Western economic cooperation, is fraying. And that has implications far beyond car dealerships. Jobs, investments, and even diplomatic relationships are now being reshaped by what began as a campaign promise. There's also a cultural shift underway. For many Americans, German luxury cars represented a kind of aspiration, a blend of design, engineering, and status. But now, with tariffs inflating prices and nationalist rhetoric framing foreign goods as threats, that symbolism is eroding. Buy American is no longer just a slogan, it's becoming a necessity for many middle and upper middle class buyers. And for younger consumers, the shift is even more pronounced. Tesla, Lucid, and Rivian are becoming the new status symbols, not just for their innovation, but for their patriotism. Mercedes, once the gold standard, is at risk of becoming a luxury relic, admired but out of reach, and politically suspect. As the situation escalates, questions multiply. Will Mercedes move more production to the US to bypass tariffs? Will the EU succeed in pushing Washington to reverse course? Could this spark a broader trade war affecting other industries? And perhaps most urgently, what happens to the workers, dealers, and consumers caught in the crossfire? For now, there are no easy answers. Only uncertainty, rising costs, and growing tension between two economic giants. Mercedes-Benz built its reputation on precision, luxury, and consistency. But in 2025, consistency has been shattered by politics. The world's roads may still crave German engineering, but the lanes leading to American driveways are now blocked, not by consumer demand, but by political will. And unless something changes, the future of Mercedes in America may soon belong more to history books than highways. If you found this analysis valuable, make sure to hit that like button, subscribe for more deep dives like this, and let us know in the comments, do you think Mercedes will bounce back? Or has Trump's tariff war dealt a fatal blow to German auto luxury in the US? Thanks for watching.